Let's put on some music. Music, technology, and a vision, bitches. Fuck you, Biden. Ba-da-ba-bum.
Slightly hungover, slightly hungover you. Slightly hungover, slightly hungover you. I'd be lying, baby, if I said it wasn't true. Slightly hungover, maybe slightly blue. Slightly hungover, maybe slightly blue.
Hey, Afri, how are you, mate? Afri's one of our F1 traders.
I never had the blues, baby,
Before
before I met you.
How are you, them on the street? Yeah, I love the blues, man. The blues is my jam. Hello, Raymond. All right. This is the one of the playlists that I listen to while I work. You know, if you, I'll share it with you on the chat because it's an awesome blues playlist. A blues, baby. All right, FOMC day, bitches. Let's do this. You're up 5% today already. Well, fuck, man, that's awesome. I didn't trade today myself, bitches. I'm gonna stop saying that. I don't know why I'm calling everybody a bitch. um. Uh. Well, that's fine, man. So I'm looking for shorts at the open rate. The reason is because again the FOMC is set to hike interest rates by 75 basis points, right? So yeah, I'm looking for shorts at the open and shorts only. And shorts only. And yes, I do have a big ass swing trade open on the long side, but that doesn't mean that I can day trade the downside, right? So there you go. Looking for shorts and shorts only in US equities. All right. So I might just get in on a short here, pre-market, guys. I'm gonna go short here at the break of these lows. Putting all my stop losses above the 5-minute highs. Just as a starter position here. Boom. A 2.7 R, let's call it, risking 0.5%, 38.41, 38.41.30, 38.41.30, 38.77. All right, let's do this. Indicator list. I'm gonna calculate my position size, guys. Hold on. 30 what? 38.41. 38 41, 38 81. I don't know. Hold it. 38 87. Oh, that is way too big. All right, so this is I'm gonna take this on a half risk basis, man. Right? I dig it. I dig it, dig it, dig it, dig it, dig it. All right, so 0.07 on the account that tracks the um VIP trades. So I am going to get it on that. On new order. 3841. That sell stop on the S&P 500, US 500. Sell stop 3841. 30, 38, 41, 38, 77. Shit. 0.07 is the volume that I'm using here. 38, 41, 41, 38, 77. I'm going to go through my thought process because I will record the video for my VIPs, of course. And I'm gonna target, this previous key level, something like this. I reckon, yeah, something like this. So that'll be a 1.5 R. Remember that it's FOMC day. I'm just starting. I'm just trying to trade 78, 37.85. 37.85. It's FOMC day, so I am really, really just trying to trade momentum, right? At the open. Let me send this to my up here. So, uh-huh. A US 500. It's a sell stop at 3841. Stop loss at 3877. And a TP at 3785. Right, risk 0.5%, 0.5%. That's it. Now, I'm gonna record the video for my VIP, so listen up. That is my thought process on this trade, right? Okay, man. Let me grab some coffee first. Mm. All right, traders, how are you? Let's talk about this S&P 500. Short idea that I have. Yesterday we had a very red day, not very red day, but we did have a red day after that. I missed this trade too, actually, after the gap close and the inducement here to the upside, right? The bull trap. Now, what I'm trying to do here, I'm trying to trade the continuation on this bearish move. Why are we talking about bearish moves? And why we are so certain about bearish moves? Well, there is no certainty in the markets, but today we have FOMC day later on today, and it's expected that the Federal Reserve is going to hike again interest rates by about 75% basis point. This is very bearish for U.S. equities in the short term. So we are trying to capitalize on that. The setup that I'm taking is a pretty simple 15-minute break of the daily lows. These are the daily lows. And my stop losses are at the daily highs, above the daily highs. Um, Trying to take profits at around the 37.85 or this key pivotal level. Right? I'll keep you guys posted. So it's a 1.5 R mate. All right. Wasn't on the trade. I don't understand what you're talking about. So let's have a look at some other markets. Um, yeah. Oh, on the trade on the VIP. Yeah, I forgot that. Let me put it. That's right. That is correct. 1.55 R. Okay. Now, same inducement play here on the Nasdaq yesterday. I missed these trades. I was in front of my computer because if I had been, I would have taken them. Now, there's another thing that can happen here. There's another play on the S&P 500, right? Let's go to the 50-minute chart, to the 5-minute chart. So, price has been ranging throughout the day, right? Now, what I'm looking at here is a break below. We are 40 minutes away from the market open, so we're going to have to wait for this. Oh. Actually, I'm gonna come back to the S&P 500 later. Let's have a look at gold. Gold. Let's have a look at what gold did on the past FOMC day. That should be fun. This was my gold trade, as you already know, that I missed by 7 pips. Now gold is retesting a heavy zone right here, this previous heavy area. It has tapped. Yeah, I'll do that later. And has tapped that supply zone. Now, I'm not looking for shorts in gold at all, but we have three very strong rejections on the 15-minute candles. So we will have to wait and see. If you can find the US 500 on your MT4, try S&P 500, try SPX 500, try anything with 500, man. All right. Ooh. Let's move on. Well, mate, go to your. Okay, do this. I'm gonna show you something, mate. Because I didn't went through supply zone on the FS on the S&P 500. All right, so K. When you have your market watch here, click right and click on show all. Sometimes it's hidden, and just have a look at the where the equities are, and just find the one with the 500 in it, man, and that's it. Um, well, mate, if you didn't find anything with 500, then you should definitely talk to your um, yeah, to your team, not to your team, to your supply, not to your supply. Damn it, to customer support. All right. Yes, I have thoughts on BTC, mate. I will go through Bitcoin too. Could you show us again supply zone on the S&P 500? I didn't go through supply zone. It's a simple breakout. Is a 53 spread on the S&P 500 good? I don't know. Let's have a look at what I have here. No, man. I have a 1.5 pip spread. You're getting fucked with a 53 pip spread. Most definitely taking advantage of. All right, so S&P 500. Let's go back, right? Um. Yeah. So a couple of things. Yes, we do have imbalances here on yesterday's moves, right? We do have imbalances here on yesterday's moves. Um. We have a level that is capping the upside on the S&P 500, but this is a breakout trade. It has nothing to do with supply or demand. Um, well, maybe it has something to do with supply and demand in the sense that I'm targeting a demand area, but this is a simple breakout trade. Now, having said that, mate, let me see here. No. Yeah, I'm gonna move this to my other screen so you guys can't see it. All right. Yeah, this is an F1 strategy setup too. Not the best one, but it is. Mate, I'm not gonna repeat myself on the S&P 500, but here's the trade, all right? It's a sell stop. Awesome K, awesome K. So there is some imbalances here created by this big ass move yesterday. Um, the area of supply that created those imbalances. Let's go to the very low time frames. Look at the 5 minute chart, right? Just to find supply and demand, right? Because there's a couple of things that can happen. Remember that FOMC is later on the day, so FOMC is later on the day. So what we can have here is a push up. Here's an interesting spot, right? Here is an interesting spot. So what we can have here is a push up towards these levels and then the continuation down. In any case, I'm just looking for sales. If price rallies above the daily highs and breaks with the daily highs, I am going to... Ali, ¿puedes dejar de hacer ruido, porfa? Más bien, solo después. Pues sí. All right. So, what I'm going to do here is simply um, this, right? And just finding that area of the supply on the S&P 500, right? So we were looking at an area of supply on the S&P 500. Maybe we can find something right here. That's oh boy, I hate this. What happened to my colors? Supply. No, this looks like I don't want it background, and I want it red. So something like this, right? That created the imbalance. So two scenarios here, guys. Good morning, Orlando. I wanted to ask you about imbalances you talk about so much. What are they? Why is that price needs to return to the imbalance? Is the institutions mitigating? Um, yeah, sure, Fred. That's a great question. I'm gonna do a little imbalance thing right now. Now, imbalances in the market are gaps in the market. So I'm gonna talk to you. Hold on. Give me just a fucking second. So imbalances are in the market are gaps in the market, right? Gaps in the market are created when we have a very, very high volume of, in this case, sellers and a very low volume of buyers, right? Remember, the market is a never-ending, I'm sorry, auction between buyers and sellers, right? So we have sellers trying to sweep all the buy orders and buyers trying to sweep all the buy sellers. So this is a balanced market. When we have imbalance is when there is a ton of sellers in this case, right? Because we have imbalance to the upside too. Uh, when there's a ton of sellers and not enough buy orders, so the sellers sweep through all the sell orders and sweep through the levels very fast. And real buy orders or heavy buy orders are found down. That creates a gap in the market. That's an imbalance. So now I'm going to show you what an imbalance looks like, right? Let's go to the 2 minute chart. 2 minute chart should be fine. All right, here. So here, let me just delete. I'm going to delete everything here on my chart, and I'm going to rework it later. So an imbalance here are these zones. Let me grab a brush. Are these zones that have no wicks, right? Here's an imbalance, and here's another imbalance. These are gaps in the market, right? Now, a balanced market is where there is no gaps, which means that wicks from the candles above have already mitigated or have been touched with the wicks from the candles up below. That is how you can see imbalances in the market. And as you can see, we have quite a few. Now I'm going to mark them horizontal, with horizontal, not with horizontal, but with, yeah, imbalance here, but with a rectangle, I'm sorry. And a fucking imbalance here. Right? So these are imbalances. And I don't know if you've heard this before, but there are gap traders in the market, and what they say is that gaps or imbalances are meant to be filled. I am not a gap trader. I don't trade the Sunday gaps or whatever. But I do believe that imbalances are areas um, that act as magnets. Now, the other reason that the other reason that I'm only using 0.5% here, guys, let me show you. I mean, you have to look at the market, right? You have to understand what the fuck you're looking at. The other reason that I'm looking at only using 0.5% at the break of these lows, right, is because yeah, I mean, the open can bring bearish pressure and we can get our trade on, right? But also there is liquid. Well, actually, the liquidity that was built here was already taken by this high. So don't fool yourselves. Here it is. So it's very plausible that we are going to go lower. Let me explain to you why. So we have here an inducement, right? Just a bull trap above these highs. Um, this was just a liquidity grab before the real move to the downside. So because I didn't get in here, because I don't trade equities pre-market, right? I am placing that sell stop. Now, um, if you are a supply and demand trader, there's a couple of things inside of this inside of this range that might be of interest to you. I'm going to keep my oh boy, what happened with my camera, man? There you go. If you have any questions, go ahead. Um, Frederick, if that answer your question, I don't know what the hell is going on with my camera. There you go. All right. So if that answer your question about imbalances, let me know, mate. Patel, hey, how are you? What do you think about Euro USD? Are you still planning to sell it? No, I never said that I want to sell the Euro USD. All right, Frederick. Hello, everyone. Can someone help me try? And if there, all right. Hello, everyone. Can someone help me to know if these messages are signals? No, they're not signals, mate. They are levels. Those levels, Assis every day shares those levels with you. Those are daily key levels that you're supposed to use. I mean, you're not supposed to do anything, right? But you could use those in your trading. They're not signals. Well, why exactly those price needs to revisit the imbalance to fill it, just to fill the gap. So yeah, on gold, yes, you know what? I'm gonna be completely and utterly honest with you guys. I want to sell gold. I want to sell gold. I want to sell gold. Now, let me share with you why. Even though one, because of this. First of all, here this looks very trappy, very like an inducement, right? Actually, I am going to sell gold. I am going to put on a sell stop here. Let me go to the 7 minute chart. There's absolutely no reason why I use the 7 minute chart, guys. There's no reason at all. I am smelling like a rose that somebody gave me on my death. Right, so the reason that I'm really digging the shit out of it is because of this. We have inducement here, right? That means bull trap. Boom. Here we have a very beautiful inducement. Then I'm not gonna place a sell stop. That's crazy. How relative is FOMC to oil? Not too much, man. Not too much. Not too fucking much. So here, Acabe. Now, what was I doing? Hold on. So, yeah, I mean, this is pretty bullish, right? Um, we have inducement here, which is good, right? I am not going to place a sell stop because we are in a bullish market, right? I mean, one golden rule that you need to follow in trading is don't ever place a trade against the trend. Now, I am looking for a counter trend trade, but I will never place a trade with an unconfirmed reversal. That's the only way I would place a sell here. What does that look like, right? All right, let me just delete this. I'm gonna delete everything here. All right, I'll delete this, delete this, delete this, delete this. So we have inducement here. First of all, I'm looking at this. This is not ready. Far from it, mates. This is not ready. Here, we have a liquidity sweep or inducement or however you want to call it. Let's call it inducement. This might be an inducement. This might be a sell, a bull trap. Yeah, and see, I agree with you. Limit orders are missing entry. You have to understand, mate, that that is a new entry model. I'm still working on it. So, I mean, yeah, I've missed those trades too. I mean, for example, this gold was missed by 7 pips, which is fine, right? I'm still working on those entries on my power buys, power sell levels. Yeah, but you know what? Just have patience. Just have patience because once I finish refining these entries, then we are golden, man, and we are going to make more money than we already made. So, we have an inducement here, right? The structure of this market is on the short term very bullish. Rakatakatakata. Now, what I also like about shorts in gold is this: we have liquidity here. Boom. Sell side liquidity in the market. This looks yummy. So I might just do it. Um, I might just do it because I don't know if we're going to have time at the open to do so. But I would love to see something like this. Hold on, let me show you. Something like this. Hold on. Right here should be. should be a good change of character level. Oh boy. So I would love to see something like this, right? From current prices, changing the character of this market, coming back towards this area of supply, and then moving down, right? So this, I'm taking out this liquidity, not all the way down here. I haven't figured out the demand area, but most likely the demand area that created this. So something like this. The demand zone that created that break of the structure should be this. Just sweeping this, and we do have an imbalance here. I mean, this is getting better and better and better and better. Tiny fucking imbalance here. Right. So we have an imbalance here. We have that demand zone. We have that inducement. And now let's look at the supply area. I mean, this might absolutely not work out or not play out, but you need to have a plan when it comes to trading, right? Now, some sell orders piling in, something like this. Here. Here is good. Supply zone. Right, let's go back to the 5 minute chart. So something like this, mate, is what makes sense to me right now in gold. Yep, this is what makes sense to me in gold, and yeah, this is what I'm trying to trade. Remember that price might just go up and break with these highs. If it breaks with these highs, then we have a break of the structure and this is no longer valid. Right, but it's looking good. The S&P 500, guys, for everybody that was asking, my entry is below these lows. We do have a massive key level here. Oh boy, that was a good entry, good short entry here, but that's fine. Now we are 13 minutes away from the market open. We are still rocking those. Well, we're not rocking anything at the moment. Um, Let me talk to you about. Hold on. Let me see if Jim is online. Yes, that was some good instant coffee. So two scenarios for the open, right? So Nancy, I really hope you hang in there because those limit orders are going to be phenomenal, right? This gold, I mean, whilst dissecting this gold market, I really like it. I really like it. And also, there's tons of liquidity here. This is the first buyers that are going to get fucked if that happens, right? Yo, the porn sites are here, so that means we are doing something good. Right, so that's gold. The shit. I got stuck out on my shorts on the pound yen at break even on the last part. Right, I made 55 pips on this. Was very good trade. Uh, yeah, Bitcoin, right? So Bitcoin. Um, all right, a couple of things on Bitcoin because this is quite interesting. I do have a pending order with the swing trade VIP team. I'm not gonna share it here right now, Aja. Right now, Aja. Woof. Oh, that was a good one. All right, BTC USD. Hold on. Um, all right. Let me just calculate my position size in gold, because this might go very, very fast. And I'm going to invite everybody again. All right, so give me a second. I'm just inviting everybody, man. I mean, yep. I believe that everybody should make money in the market. Oh boy. Right. Now, position size. 16. All right, good. Now, Bitcoin, Bitcoin. I do have a pending order with the VIP swing trading team. So this looks like a triangle, right? Now, in my opinion, Bitcoin could be higher, could go higher. A break of these highs, the level that it was capping the upside in Bitcoin, uh, was a really good idea, good thing. I'm sorry. Now, the next level capping the upside in Bitcoin, 22,800. Now, I do believe that we could go there, but I believe that there is a ton of people that are going to get fucked here. Why? Because of this. Always look at this. Always look at the liquidity being built up. Now, I am never going to buy Bitcoin at this level because this move I missed. Right? Now, the people that are going to get fucked are the people that are trying to buy the dip towards these levels. Right now, even lower. Right here, right? This level, this is the deep buy for fools level, right? This is the deep buy for fools level. Now, for everybody joining us, we do have a gold setup. I'm going to re-explain that gold setup now to you right now after we do this Bitcoin. Now, analysis. So this is the buy the dip for fools, in my opinion, right? So what I'm looking for is these fools or these weak players getting stopped out and that liquidity getting taken out for me to buy lower around the 1960. That's my opinion. Now, if this is in fact a continuation pattern, then what I'm going to do, I'm going to buy the break of the highs. It's as simple as that. Those are my two scenarios in Bitcoin. Now, for everybody joining me, welcome to the show and welcome. I am going to go through my gold shorts my gold short idea. Now, this is, my friends, the forward chart, and I'm not looking up. I'm looking at the 7 minute chart. Now, what I was talking about is this, right? Now, uh, first of all, we are trading at a very important key level in historic price action, right? So a retest of the previous broken lows right here, this entire level, boom. Let's call it this level. This is much better. This entire level right here. Now, if we look at the 50-minute chart, it started with this. I was looking at the 50-minute chart and I saw these three candles. Very, very um reversally candles. They call it reversally, right? Then I told everybody, you know what? This looks very, very sketchy for longs. More so because of this inducement. So we went to the lower time frames and we started to look at the market and dissect the structure of this market. So there's liquidity being built up here that apparently is going to be taken out. Now, what I said to everybody is this: do not ever, do not ever, ever place a trade against the trend, right? Now, I am looking for a counter trend trade, but I need that trend reversal to be confirmed. So, what I'm going to wait for here is this, is the break of the lows. Actually, I'm going to maybe wait for the break of this lows for a change of character in this market, right? That a break of the lows is not sufficient. It's not sufficient for me to um, go short. Now, what I want to see is this: is price breaking with those lows. And when price breaks with those lows, I want price to come back towards this area of supply that created the break of the lows. And here, my friends, is where I'm going to go short. And this is the entry model that I'm using, right? So basically, once these lows break, the reversal in this market has a much higher probability of success than um, yeah, has a much higher probability of success than going short here, right? Going short here is crazy. And not and waiting for price to come back towards that area of supply has a much higher probability of success and a much higher risk to reward ratio than placing sell stops here. Because if I were to place sell stops here, I would get around a 2R. But if I wait for price to come to my power sell zone, I would get an amazing mates, an amazing 5R. So that's what I'm waiting for in gold. Yeah, that's what I'm waiting for in gold. Let's have a look at this. Yes, right into my power sell zone. Right into it. So let me just delete this. I'm gonna keep that level above. Right into my power cell zone. So that's what I'm waiting for, mates. I mean, that's my game plan. That's my game. That's my uh, that's my game play. No, you don't say that, right? I don't remember. But that, I mean, let me know what you think about this. Let me know what you think about this, right? This is the entry model I've been working on. And of course, that at the open, price might just break with the highs, and everything I'm looking at might be just invalidated, which is fine. And that's why you don't take a sale just because price hit that area of supply. You are the best, mate. Thank you, Chris. Thank you for the kind words. I really, really appreciate it. So, woo, let's wait and see. 6 minutes away from the mambo, from the market, from the casino to open. Thank you, RS3. So the S&P 500 still holding on to those fucking uh, uh, sell stops. All right, I'm gonna focus on gold at the open because I already have those. Thank you, Chris. I already have those. Those S&P 500 sell stops in place. So that's what I'm looking at, right? This is my game plan, and I will only trade this game plan. I'm not gonna look at the Euro US dollar, mate. I don't know. I haven't looked at it. Look at that price action on gold. Pre-market is on. And there's no let's go to a 1 minute chart just to appreciate those that volume. Yeah, that's about it. That's what leverage would you recommend for a smaller trading account? Listen, it really doesn't matter because you are never going to use full leverage. You're never ever going to use full leverage, so it really doesn't matter. If you are disciplined in risk management, right, you're never going to use full leverage. Even if you have a 1 to 1,000 leverage, you're never going to go above a 1 to 25 if you're risking between 1 to 2%, maybe 1 to 50, but you're never going to go above that. So it really doesn't matter unless you want to go all in which case it matters a ton, but which I wouldn't recommend. All right, let's do this. How many? We are 3 minutes away from the casino open, guys. Get those fat fingers ready. Right, so this is my game plan, and I will only trade this game plan and this game plan only. This is my power sell zone. Let's just have a quick look at this within this range. Within this range might go a little bit higher. Uh, 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 Now this is, I have to take the entire move. Yeah, this is my power sell zone, guys. As you can see it here. Okay, we're good. We're good. We're good, good, good. No imbalances left to fill in this market, or at these highs. And the S&P 500 are really absolutely doing nothing pre-market. Uh-huh. But you know what? We already have those sell stops in place. I am, however, going to move those sell stops very quickly to break even should we get triggered. So heads up to that. Gold. We are 2 minutes away from the open. 2 minutes. Oh yeah, maybe I will. Cellmate, maybe. I am not doing anything on gold just yet. Just yet. There's a couple of things I need to see before going short in gold, mate. And if you just came in and you missed the explanation, just rewind. Go back 5 minutes. All right. 1 minute. Oh, I'm sorry. um, did we get this? Yeah, the non-farm employment change. All right, big number. Okay. 30 seconds or so. No, 45 seconds. Now the S&P 500 looking very. Actually, you know what? I'm going to put the S&P 500 here too. I don't know why I didn't do that. S&P 500. There you go. On the 1 minute chart. 1 minute, the S&P 500 on the 1 minute chart, just that we can have a look at open volume. Remember that sell stops should be below the daily lows. So All right. So 10 seconds. Boom. Market just opened. Let's have a look at gold. Um, gold sellers looking heavy. The market just opened, and the S&P 500 looking little flatty, 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 flatty. Now, are we going to place a sell stop below these lows? Fuck no. Why not? Because I want that big risk to reward ratio to hit me. So, and I am not going to. Now that is the reason, right? There you go. We will come back to the S&P 500. Uh, why this is my game plan. So, putting my sell stops here below the change of character level, here below these lows, would give me in fact a about a 2R on my trade right here, a 2.46R. But uh, waiting for the pullback towards the supply zone gives me a almost 6R trade, right? So I want that 6R. Mate, S&P 500, S&P 500 breaking the immediate lows, looking good. So I want that 6R trade, right? And then the question is, if you want the 6R trade, why don't you sell right now? Well, because this is still a very bullish short-term structure made, and I am not going to sell in a bullish structure. I need that break in order for me to have confirmation of a possible reversal, right? About to get triggered on the S&P 500, guys. About to get triggered on the S&P 500. 94 people, 94 concurrent viewers. That's awesome. I am going to Oh, I love it. So if you haven't done so, please, please subscribe to the channel. I got triggered S&P 500 short. Boom. I am triggered S&P 500 short, mate. I am triggered S&P 500 shorts. I am triggered S&P 500 short. Remember that my remember that my risk here is only 0.5%. So I'm triggered S&P 500 shorts. Beautiful. I'm loving this. Boom. There you fucking go. I'm gonna show everybody my trade here. If you're not a VIP, if you are not a VIP, you missed out on this. This is my short trade on the S&P 500. It's quite simple. FOMC day, we are expecting a um, a rate hike of about 75% basis points. So I decided to sell the S&P 500, and on a continuation of that very strong move from yesterday, targeting this area of supply for about a 1.5R trade or so, right? Very short-term trade on the S&P 500, guys. This is my trade now. Gold. Boy. Now, this is the S&P 500. Now, gold is my other one. I am waiting for those. I'm waiting for that break. That break might come with some heavy volume, some heavy volume, like Mike Tyson. Right. So let's wait and see. This is a waiting game. Woo! Olympio just sent the a new VIP trade on the Euro Yen. You are missing it out. Now, I want to tell you what you need to do. Copy link post. No. Uh-uh. You need to go here and subscribe to our VIP signals. This is what we do, right? This is what we do. I joined the VIP yesterday and the service so cool. Not about signals only, but a lot of experience to be independent. That's awesome, mate. We try to deliver the best. We try to deliver the best. We try to deliver the best service out there. Now, gold not doing much, right? Gold not doing much. There's no volatility at the opening gold. Let's have a look at, the Nasdaq, the Dow. Because it's FOMC day, if I really don't see more volume jumping in the market, I'm gonna close this at break even, right? But for now, I'm going to let it ride. Very possibly, we're going to get in a little bit of a drawdown if price wants to come back towards this area of supply before doing its thing, which is fine. But for now, this trade is in the money. Money, money, money. Right, so this is the I'm gonna go to a 5 minute chart just to appreciate the entirety of price action. So this is gold, mates. This is fucking gold. I need that break of the lows. If this break of the lows doesn't happen, I am not going to trade gold. It's as simple as that. You have to stay true to your entry model. Stay true to your entry model. Yes, that is Olympus Trade, and he hasn't updated the VIP group. It's because he's still holding, and I am looking at the account, the tracks, all the VIP trades, and he is still holding that oil. So I mean, it's up to you what you want to do, right? But Olympus still holding that trade. All right. So I'm gonna go pee, guys. I'll be right back. And I'm gonna stay on for as long as it takes for us to get filled on this long that we even haven't placed just yet. But once these lows break, my friends, this is going to go very quickly. Crisp 3 minutes expired. Well, shit. I'm gonna have to pay for that. I'll be right back. All right. All right. So, the US 500 didn't get triggered on AVA. All right, mate. So that's the thing. That's the thing, okay, that you need to understand. When it comes to CFDs are, CFDs on equities such as the S&P 500, the Dow, the Nasdaq, and CFDs on futures such as crude oil, treasuries, etc. The pricing might differ from broker to broker, right? So that's why I always send a video explaining. There you go, gold, breaking with the lows. That's why I always send a video explaining where my entries are, so you can actually place your entries um, at the levels and not just copy the entry price from my broker, right? I, Yeah, but you know what? If I mean, if I'm right about this and price goes down, I mean, you're going to get filled on your short, so don't worry. All right, so yeah, gold breaking with the lows. Let's wait and see what happens, mates. Now let's wait and see what happens. I mean, I really don't like this. This break looks so weak. Uh, what is that breaking? In any case, looks very weak. Let's wait. Let's wait. Let's wait. Let's wait and see what happens. All right. Now, should I? Would I? Should I? Right here. There you go. Now let's pinpoint. Oh boy. So you can choose your broker. Pepperstone. Ah, that's awesome. I might just go with Pepperstone then. You know my this one. No, I'm not gonna tell you that. That would be foolish for me. So 1 minute chart. Let's pinpoint those supply areas that I want to trade. Now that we have a change in character in this market. All right. A volume. Here's the here's that accumulation. Oh shite. Uh huh. All right. Here you go. Something like this. Let's have a look. No, it's actually this. Here. This is the zone. Now this gives me made a actually gonna go back to the I don't know about you, but I hate the crosshair too. I just hate it. Fucking hate it. Right into my power sell zone. I am going to place those sell limits right now. Stops. I mean, to be completely honest, I could put my stop losses above that supply zone, but I want to be. I don't want to be because it's FOMC day. Most importantly, I don't want to be that tight. Yeah. So true that imbalance gives us 6.75 R. How the fuck do you feel about that? Yeah, I'm loving this. So, very possibly we'll be placing this trade very soon. Um, I just need to wait and see what happens. Big up on the new signal. Cheers, mate. All right, now I'm gonna place this. Uh, um, maybe, maybe not. So hold on. Should be right here. I'm risking only 0.5% on this one, mate. You feel me? Huh. I mean, there's no need. Oh shit. Delete. There's no need to risk big when you have such a big risk reward ratio. So I am going to be placing. I'm going to place. I don't know why I talk like that sometimes. I hate it. So I want to get filled, right? I want to get filled. So it might be a little lower than my power buy zone. 1656.50. 1656. Here's the 65. No, fuck it. 1656.70. Right there. Sell limit. I'm only risking 0.5%, mates. Sell limit 1656.70. 1656.70. Stop loss is 1659. And target 1641. All right, there you fucking go. Risking zero point 0.5. Oh, that's an amazing risk reward ratio. I'm just sending this to my VIPs because apparently I did have the time to do so. 16 what? 1659 and TP. Uh, 1641 on a what? 6.2R. Risk 0.5%. Well, so I'm gonna send this to my VIPs, mates. I just did. I'm going to record that video right now. So if you weren't here for the explanation, then there you go. I'm gonna redo that, re-explain it. Uh-huh. Yeah, today gold is risking. That one of the reasons that I'm using 0.5% risk, and of course that I mean it's risky during the FOMC press. Data dump, right? I'm never going to hold a gold trade or an S&P 500 trade through that through the data dump, mate. Never going to do that. But you know what? That is 5 hours from now, 4 hours from now. So we're good. We might get some pips out of this trades. So hold on, I'm going to record this just a second. Hello traders, why don't we talk about this gold trade I've been hunting for most part of the day. So this is a short on gold, and let me explain to you. First of all, something that you need to know is never to trade against the trend. Now, I know it sounds counterintuitive because I am placing a counter trend trade, but let me fucking explain myself. Now, when I say never place a trade against the trend, I mean never sell into strength without confirmation of a possible reversal, which is what I'm doing here. So basically, what I'm doing here is, first of all, I looked at the very high time frames and I saw price are rejecting this zone, right? These previous broken lows. Now, what I like about this possible short in gold is this. First of all, this inducement right here, this bull trap on the 50-minute chart. You can see, this is a 7-minute chart, but it really doesn't matter. Tons of rejection here, tons of rejection. Now, what I'm doing here, I was waiting. Now we're going to go to a 3-minute chart so you can see what I'm doing here. What I am looking for, was looking for, was a break of these lows, right? A break of the lows, changing the structure, changes the character of this market, right? Even though this was a very mild change of character, it's still
a breakout. Now what I'm looking at here is price to return back to the supply zone that created, or where the sell orders were piling up, that created this break of the previous lows, right? Now what I'm looking here is that that gives me a 6.2R, right? So basically this is what I'm looking for, a change of the character. This was my game plan. The red arrows, a change of the character, which already happened, and then price coming back towards my power buy zone, power sell zone in this case. This is my entry model. And my stop loss is above today's highs, of course. I'm only risking 0.5% because it's a counter trend trade, and because this is a massive R, and because it's FOMC day, and because. So instead of placing sell stops here, right below the lows, which would be in fact uh, trading against the trend, I need this to play out in order for me to get confirmed in my trade. Yeah, our VIPs also get all kinds of explanations on our video, on our trades, mate. So always remember that. No, cancel. Ah. Rum. All right, so there you go, guys. I think I'm gonna end the let's see. What time is the FOMC meeting? Well, let's look. I mean, it's at noon here, and here it's 7:51 a.m. So in 4 hours. Oh, will the FOMC affect gold? I don't know. Whew, I'm sorry. I don't think so. I mean, mate, crypto gem. Just look at the forex calendar, man. There you go. At 12:30. Yeah, just look at an economic calendar, mate. So nothing to do here. Pretty mild open, in my opinion. I mean, if I don't see, I might just close this to break even if I don't see some further downside continuation. I'll keep my VIPs posted. In any case, thank you for joining me, guys. I really appreciate it. Have a great time. How many trades can we set every trade? I don't understand that. Uh, no, I don't know. I mean, I don't like to assume things or what I think really doesn't matter. I like to watch the data dumps and look at raw data. I don't know. Let's have a. I mean, Olympia is going to be live during that FOMC data dump, so don't miss that out. Right? Again, thank you for joining me, guys. I'm gonna end up my stream here, and you know, Olympia is coming live. Minutes or 15 minutes or so before that FOMC press release, so don't miss that out.